Yo, what is up guys? Welcome to another video. So I know I said I wasn't gonna make another video on the stock market, but honestly guys, these last couple of days have been pretty chaotic, and I want to give some of my thoughts of the market and what's going on and keep you guys updated, because as an investor you should be like super scared right now because everything's crashing down. All the news that I can think of are very bearish right now. Like everything's pretty much on the bear side. Wall Street's on the bear side, the Fed's on the bear side. There's so many negative news all over, and it's very easy to fall into your emotions and just sell. And like I said guys, if you have an over $1 million portfolio, it's very strongly recommended to revise your portfolio and see what you believe in. And if you're just holding the index, I would honestly reassess the situation and think, hey, why don't I just wait till the Fed pivots? But if you are young, if you're a young investor, you're in your 30s and 40s, you don't have over $1 million invested. Honestly, guys, I would say that you are in probably one of these generational opportunities. This is once in a lifetime event, even though we've gone through four once in a lifetime events in the last 2 years. But anyway, today I'm gonna talk about, guys, the news that the bears have, and also I'm gonna talk about something that could potentially be the end of the bear market. Yes, guys. This could single-handedly end the bear market, and we can go back into a consolidation phase, and then hopefully by 2023 to 2024, we might actually start going up again. And honestly, guys, I mean, as strong as the bears are right now, and they have all the breaks and they have everything on their side, there is this small little thing that could honestly change the tide, and it's very interesting. Now, before we actually begin, guys, I'm looking here at the Amazon chart, and I'm gonna see if my trading analysis is correct. So from what I can see, the MACD is slowing down and the RSI is reversing. My stop loss is here on the sell, and my buy is right here when it crosses this point. We're gonna see, guys. If I'm correct, this should hopefully go to 124, 125, and that's when I'll sell. We'll see in the next video if I'm correct or not. You guys let me know. Keep me updated. It is 29th of September. But anyway, let's talk about the market. So from the bear side, right? The bears have a couple things, right? They have obviously the war with Ukraine. They have the Fed, which is now being very bearish and being like, oh, we're gonna take down inflation, blah 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 blah. Even though inflation is a thing that there's this guy that was talking on the news, and he said that the Fed is being like a pendulum. Now that things are getting better, they're suddenly like, oh, we're gonna destroy the market, and they're like, oh, they're super wrong. And a lot of people are actually saying deflation's what's gonna happen very soon, and I don't know yet, guys, because this is the first time I've been through such a bad environment, so I don't really know what to expect. I do know that everything's trying to be priced in as we speak. So the reason the market is going up and down so sporadically, like yesterday was like a rally day for people. What? And the reason it was a rally day is because the Bank of England said they were gonna, they're gonna capitulate, they're gonna pivot, and now they're starting buying bonds, which it's essentially kind of like a kick me down the road. They're trying to see what. They're trying to calm down the fear, and also what they're trying to do is they're trying to see what the Fed and U.S. is going to do, because right now the CPI on August came out at 8.3%, and from what I can tell, it's actually starting to go down. Commodities in general are actually down a lot. Obviously, the stock market is going to be down because people are scared and they're selling. And right now, actually, a lot of Wall Street is bearish, and they're really bearish just because of two things, guys. They want to look good, because obviously that's what keeps their client. They want to be like, oh, I knew this was gonna happen. They're obviously not gonna be bullish, because that then their clients are gonna run away. Look at ARK, for example. All their clients ran away, and now the price is just in the dumpster. Even so, she's still like, oh yeah, we're in deflation. I don't know, guys. I mean, from what I can tell, I personally have seen the prices gone down for me. And there's actually a 6-month delay on the effects of the Fed. So from what I know, if things are getting better now, once those interest hikes start affecting the economy, which they already are with the housing, what we're gonna see, guys, is a lot of deflation. A lot of prices just suddenly crash down. I do a lot of side gigs. I still have to make the side gigs tier list video. I'm gonna make it soon, guys. I have it all planned here in this paper. But from what I've seen, a lot of people are not going out as much. They're not consuming as much, the side gigs you do, do food delivery and all that. They're not using it as much as I remember like 6 months ago when inflation was supposedly higher. So, you know, people are starting to, you know, compress a little on their expenses, and the Fed like effect haven't really kicked in, and they're still going full force. I do believe it's going to be like 4.5 to 5% by the end of the year. We'll see. I have no clue. Maybe they start pivoting by November when they see that the CPI actually might go down lower, which is one of the things that bulls actually might have on their side. Bulls might actually, like, the CPI on August is high, it's 8.3%. But I actually think it's going to be around high sevens by September, because in August, if you remember, this is like a 1 month delay. In August, prices of gas went like down like way low, right? And not only that, but across the board, everything went lower except rent, which obviously is because people are trying to, like, you know, people aren't buying houses right now, so more people are renting. But other than that, like, the rent is only 40% and the rest is 60%. So from what I can tell, guys, August is going to be a huge hit in the CPI. I say high sevens, and if it actually goes like 7.8, 7.7, you could see a complete reassessing of the situation, because that means that the Fed is actually being way too aggressive, and they might start simmering down to the point where they actually might be under 5% or 4.5% by the end of the year. And if that happens, guys, like, bulls have a massive advantage. Like, everything's just going to reprice itself really quickly. And from what we can see, like, this is the S&P 500, right? From what I can see, guys, this might actually go back up tier to like 380s or even 400s because of just that simple change, which might actually mean that the double bottom is confirmed, which is very interesting. If that happens, it's going to be super interesting. You know, we don't know yet. I'm still doing my technical analysis here. You know, I saw the RSI divergence and I saw the lowering on volume, and if it goes up here, then I might actually do a position on SPY. Again, I'm just seeing what's going to happen. I'm not trying to predict the market. That's not my game. I'm basically reacting to it. But yeah, guys, like, that's one of the things that bulls still have on their side. The CPI in September might actually be way lower than most people think it's going to be. And the other thing that I've noticed is that a lot of analysts, like these people that like they're kind of reacting to the prices because they had like really high prices. Now they have really low prices, like after the prices crash down, not before. They're kind of stupid, you know. But anyway, like I said, guys, these analysts, like, they haven't revised earnings for these companies yet. They took the prices down, of course. So, you know, companies have a lot of pressure, and this actually might be like a bearish thing because, oh well, the prices on you know, the estimates are high. But what if these companies actually perform better or just as good as those predictions are? Because keep in mind, the prices have gone down on the stocks, but not the predictions. So if the predictions are correct, then this means that essentially all these companies are at bottoms. They're either at bottoms or they're actually like, you know, they actually meet their expectations and might keep growing. I know there was the fear on like a FedEx, which like revised their guidance and all that. But that's only FedEx. Like, no one else has done that. Apple hasn't done it. UPS hasn't done it. Amazon hasn't done it. That's why I have a position in Amazon that I'm trying to swing trade now. So, you know, you see all these other companies, and they're having really high estimates, which, if they actually fill them up, that is a huge, and I'm talking about like a massive thing for the bulls, because that essentially means that lowering CPI with earnings met, with, you know, slowing economy, means that we might actually like hit a bottom by the end of November, which is insane. And like, keep in mind, guys, like, all these companies are going to report in November. Like, here's the calendar from October 2022, brought to you by Stockwits, because that's what everyone uses for this, I think. But anyway, you can see from the first week of October, like, nothing important except maybe Tilray, which that's like a cannabis company or something. On the second week, we do have a bunch of really important companies. We have Pepsi, we have electricity, Delta Airlines, JP Morgan, Citi, a lot of banks on this week. Even Walgreens, I think that's YBA. So, you know, a lot of companies are going to report on this week, which might actually be super important, especially all these banks. Oh my gosh, it's going to be really crazy. Especially since JP Morgan has hit 2018 lows, which is insane. Next week after that, we have Netflix, which is one of my conviction stocks, Tesla, another of my conviction stocks, Verizon, you know, all these other companies. And then that last week is going to be chaotic because it's Meta, it's AMD, Microsoft, Twitter. You know, a lot of very important companies are going to be reporting on October. And if a lot of these companies have a positive ratings, guys, the market is for sure gonna try to price that in, and we might see I'm gonna go back to the chart. It might see a consolidation here on this area, trying to wait it out what's gonna happen next month, or we might actually start moving up because the market looks away. I think the market looks ahead 6 to 9 months or something like that. So they're trying to predict like the market's just gonna keep going lower, and it might. I mean, it might. Like I said, guys, I don't want to put like my personal conviction on this, but like we were here like 2 years ago, and we're still up here, which is crazy. So it might go lower, it might not. Again, I'm not gonna predict the market and gonna react to it. That's what you do as an investor, but if I know that something is cheap, I'm gonna dollar cost average into it. That's what you should probably do. So yeah, guys, the bulls might actually have something on their side. We don't know what's gonna happen. I'm really looking forward to it. Like, it's so exciting to look at this. I still have to go to work, so I'm not paying attention to the market a lot. I'm basically just doing swing trades and seeing what's going on. But October is gonna be a very spooky month, figuratively and literally, because the market is going to get wild, and the war stuff is actually escalating, so that's going to be really crazy. Bears have a lot of advantages, so I might make a video on why you should be bearish on the market, and then I'm going to make a video on why you should be bullish in the market. But yeah, guys, this might be the bull thesis. Now I have to make a video on the bear thesis because I want you to guys see both sides of the perspective. But honestly, guys, the market's really looking really interesting. I'd say if you are using margin, I would get the heck out of here. If you have any debts, I would suggest you to pay them off. And if you have any leftovers, honestly, like, dividends are super cheap right now. But if you want to have growth, I'd say, guys, like, dollar cost averaging is going to be amazing. You're going to have 10x multipliers on every dollar you put in the market in the next 5 to 10 years. But anyway, guys, thank you so much for watching this short video. I just want to keep you guys updated on the market, and I'll see you guys on the next one. Peace.